Bitcoin analysis, guys. We'll get into it now. Okay, so Bitcoin, Bitcoin's broken out. Obviously, we had that breakout of the downtrending line. It was a fake breakout, though. We didn't like the look of it. There's many reasons for that. If we flip over to the hourly chart, we can see that one of the reasons was we had, a breakout of this yellow. That's the yellow downtrending line, this thick yellow line here. We broke out. We went straight into what looked like an ascending triangle formation. Unfortunately, it was also a double top formation, right, with bearish divergence. Okay, and we said at that point, as soon as we saw that happening, we're like, okay, no, this is bad. We're not buying here. We're going to change our buying plan. We changed the entire buying plan. We'll get into what it is now in a second. But we said, hey, look, that doesn't look good. I'm not going to buy here, essentially. And we come back down here. We broke down below that double top formation, that ascending triangle, if you look at it like that. We broke down, we've come down, we've seen a resistance support flip on the yellow downtrending line, which is good. It's good news, of course. However, it's not particularly good news because at the same time as seeing that, we've also seen a strong downtrending RSI line, which could be used as a breakout if we do break it. However, that RSI resistance is lining up with 19.5K resistance, which of course is the resistance from the previous all-time high in the 2018 bull market. If we scroll back, let me get a good Bitcoin chart to scroll back on. Scroll back, you can see that 2018 all-time high is actually stemming from 19.5K. So right now, yes, look, we did see a resistance support flip. That's not bad. That's not bad news. We did see a bounce of that resistance support flip. However, we're going straight head-butting against 19.5K, which is the 2017 resistance, which is not good news. If we went to the Binance chart, we can also see that the volume is in a downtrend as we move up in this small local rally, which is indicative of people not willing to buy into resistance. That's not good, right? That's not good news for Bitcoin. Okay, so Bitcoin doesn't look particularly good. We changed our buying plan a lot. Our buying plan now has been changed to a break above this dotted yellow line. Okay, we can see we've altered the buying plan. We have 3 separate buying plans. I know this gets complicated for people now, right? Because 3 separate buying plans is like, oh, well, that's very complicated. It's not actually complicated, okay? It's only complicated if you don't understand it. The only reason we have 3 separate scenarios is because there's 3 potential things that could happen for Bitcoin, right? And we're going to get into that right now. There's 3 things that could happen for Bitcoin, okay? One of the things is we go down, sorry for the messy writing here, but I'm just going to have to make it work. One of the things is we go down to 11K to 13K, okay? In that scenario, we'd buy 33% 11 to 13, we buy 33% at the dotted line breakout, and we buy 33% at 17 to 18. I think that's unlikely. I don't think it's likely that we go down that low. It is possible, but I don't think it's likely, okay? So that's an unlikely buying scenario. The second scenario is we go down to 18K again, or 17K, whatever it is. We buy 33% there, and then we buy 67% at the reversal. And the third scenario is we just break out now without retesting the lows, which again is unlikely. So again, this scenario here is unlikely. This scenario here is unlikely. This scenario here is probably very likely. Okay, so this middle scenario is the one that's most likely going to happen. Okay, it doesn't mean the other 2 can't happen. It means this one is most likely going to happen. The third scenario again is buying 50% of the dotted line breakout and then buying 50% at the 200-week SMA, which is currently at around 23K. All right, so that's the scenarios. Now, the good part about all these scenarios, and you guys know this by now, I'm going to get into unique analysis in a second, but you guys know this by now, I'm just recapping. The good part about all these scenarios is this. If this first scenario triggers, we will have an average price of Bitcoin at around 15K. Okay, that's beautiful. That's a great average price. That would be the average price we have on Bitcoin, right? If this middle scenario triggers, we would have an average price on Bitcoin probably around 19K, which again is great. That's a great average price. And even in the worst case scenario, even if the scenario that triggers gives us the highest average price, we would still have an average price on Bitcoin at around 21K. Again, beautiful. So the worst case scenario for us right now, assuming you followed the buying plan, assuming you agree with my analysis, the worst case scenario is we get a 21K average Bitcoin price, which again, absolutely superb. So regardless of what happens here, this is why I'm pretty happy. I don't really care too much right now because regardless of what happens here, we've got a great average buying price. It's just about how great it is. So that's good, okay? Now, so we've got the buying plan. We've scheduled that all out. We know what's happening short term. Short term, we're at resistance at 19.5K. Doesn't look particularly good. Could break to the upside. But realistically, it looks more likely that we see a rejection here. And the macro is a good reason for that in a second. But one of the reasons we want to talk about the macro today is because there have been some significant macro developments, okay? One of the macro developments that have happened, for example, yesterday, which was actually just about 12 hours ago, we saw unemployment data. Unemployment data came in lower, okay? What does this mean? Unemployment came in lower, okay? That's not a good thing for the markets. And the reason it's not a good thing is because when there are more people employed, it is harder to bring inflation down. Okay? It's harder to bring inflation down when there are more people employed. That's a key point. So it's not particularly good for the markets. Okay? Sounds kind of contradictory, but that's what it is. That's just how it works. So what we've seen is that unemployment data came in lower. At the same time as that happened, we've seen the 75 basis point hike for November skyrocket. The probability for a 75 basis point hike has skyrocketed from around 51% 3 days ago to 81% now. So unemployment data came in. It was bad for the markets. And as a result of that, it's prompted people to be more confident in the fact that the Federal Reserve will take a more aggressive approach in dealing with inflation. So now the chances of the Federal Reserve raising interest rates by 75 basis points has skyrocketed. The chances of them raising them by 50 basis points has kind of gone down a lot. Now, this is not good for a macro reversal. If we want to see a macro reversal, we need to be seeing, a 50 basis point hike here from the Federal Reserve. We need to be seeing them slowing down the magnitude of the hikes. So it's not good. Okay, that's not good. Another thing we need to look at as well is the fact that normally when and this is very bad for the stock markets, right? We'll get into Bitcoin in a second, but this is bad for the markets. Normally, and this is something I picked up on yesterday, right? I think a lot of people picked up on this yesterday, actually, because I've seen lots of videos around about it. But normally, when the markets are in a downtrend, the Federal Reserve is cutting interest rates. This orange line here, that is interest rates, okay? And these lines here, these price action lines are the stock market, okay? The S&P 500. Normally, when we're in a downtrend, the Federal Reserve is cutting interest rates, which means it's trying to lessen the blow on the markets it's having, right? Now, the problem with this situation here is this. The Federal Reserve is raising interest rates while we're in a downtrend on the S&P 500, which means the Federal Reserve right now has realized inflation is so high that we cannot simply do what is traditional here. We have to raise interest rates even though the markets are in a downtrend. We have to do it because, there's no other alternative. Okay, so the Federal Reserve is raising interest rates while the stock market is in a downtrend, which will prompt a more negative reaction on the stock market. So what I will say to that is that it is very, very, very unlikely that the S&P 500 will bottom out until interest rates start going down again, which could be 5 to 6 months away, right? There's a few reasons for that. One of the reasons is because, and this is the main reason for it, we have never seen, ever seen the S&P 500 bottom out until interest rates are being decreased, okay? These pink lines on the interest rate charts, right, are reflected perfectly to these yellow lines on the S&P 500 charts. What it says is this. It says, we have never seen a bottom on the S&P until interest rates have begun decreasing, okay? Right now, interest rates are still rising, and we have every kind of, reason to believe they will be rising for at least a few more months. Okay, and then they won't be dropping for maybe 5 or 6 months. That's as per the market's expectations. So we can hence assume that, hey, the S&P 500 and the stock markets, for example, traditional markets, whatever, they won't be bottoming out for a long time. 5 to 6 months maybe. Okay, so there's a lot lower to go on the S&P 500 and the traditional markets. Now, what does this mean for Bitcoin? Now, a lot of people who don't necessarily understand Bitcoin would say this. They would say, okay, if the stock markets won't bottom for 5 to 6 months, Bitcoin won't either. It's like, no, that's not necessarily the case. Generally speaking, on a general basis, you are correct, but that's not necessarily the case. All we need to do to debunk that is look at what Bitcoin has done historically. Historically on Bitcoin, just recently, we saw a top out in November, as per the 4-year cycle theory, while the S&P 500 topped out in January, okay? The S&P 500 topped out in January as per the macro, and the Bitcoin topped out in November as per the 4-year cycle theory. Now, this is evidence to suggest that the 4-year cycle theory, to a certain extent, is stronger than the macro for Bitcoin, okay? So, what does the 4-year cycle theory suggest now? The 4-year cycle theory suggests that Bitcoin will bottom in Q4, and hence, seeing as the 4-year cycle has outpowered the macro before, we can assume it's going to do it again. I would still expect a Q4 bottom on Bitcoin, even though I think the S&P 500 will be going down for at least 5 to 6 more months. Again, I'll repeat that. I still expect a Q4 bottom on Bitcoin, even though the traditional markets will be going down a lot more. That's my kind of thing on Bitcoin. That's what I've got there. That's what I've extracted from the traditional markets, and that's what I've extracted from that unemployment data that came out yesterday. I don't think it necessarily matters for Bitcoin. I think the 4-year cycle will outpower that macro. Okay? Do I think Bitcoin will be going crazy and pumping during this period of time? No, I don't. I just think it will bottom out. Okay? I think it will bottom out. I think the 4-year cycle is stronger than the macro. I genuinely do. And yeah, that's my kind of Bitcoin prediction. So yeah, that's honestly what I'm going to post as the video there. I'd like to know what you guys think about that. Pretty controversial claim. I think the 4-year cycle is stronger than the macro on Bitcoin. I genuinely do. I have no reason to believe that it's not, right? Not only based on the fact that this is a 10-year long trend that has played out almost perfectly over a period of 10 years, but also based on the fact that, you know, we've seen it historically. November was the top for Bitcoin. By the time the S&P 500 topped out in January, Bitcoin was already down 40%. There's no saying that can't happen on the reverse. There's no saying that Bitcoin can't top out a few months earlier and then be up 40% by the time the S&P 500 bottoms. Seen it before, we can see it again. That's my thing on Bitcoin, right? That's what I'm kind of seeing there. 4-year cycle, very strong, very strong. Predicting a Q4 bottom. I'm going to stick by it. Do I think that bottom will be at 17.5K? With that news that came out yesterday with the unemployment rates, I'm less confident in the 17.5K bottom, but I still would say it is the most likely scenario. I still say that a double bottom is the most likely scenario. Okay, I want to show you something that actually reflects that. Let me get out a fresh chart here. And we can look at why I think that. Well, one of the reasons I think that is this. Get out this fresh chart. It's this, right? Nothing has happened in this bear market so far, and this is something I've covered before as well. Nothing has happened in this bear market so far that is unconventional. You might argue, you might say, oh, what about losing the 200-week SMA? What about losing, that macro alignment I just deleted, right? What about that? Well, those things are inevitable. You have to understand. Moving averages, macro lines, all those kinds of things, they are inevitable. They do not represent unconventional bear markets because they will break eventually due to the fact that we have diminishing returns on Bitcoin. Okay? Date range trends and structures overall, those are things we need to be looking at. And if we're looking at the date range trend, obviously 4-year cycle theory, that's going out pretty perfectly. That's very conventional. That's a normal bear market. And if we're looking at the structure, that's pretty perfect as well. What did we see? We saw horizontal consolidation in 2015. We saw horizontal consolidation in 2018. And we saw horizontal consolidation here at 28.6K. Okay? And then we saw one breakdown. And then we saw a rounding bottom on all occasions. Rounding bottom, potential rounding bottom. There's nothing here that I can see that suggests that this is an unconventional bear market for Bitcoin, which again further reinforces the fact that I think the 4-year cycle is stronger than the macro. Because even in the midst of this global recession that we're seeing, right? Some people don't even think it's a recession yet, but the fact of the matter is it is a recession, or at least it will be a recession, depending on your viewpoint on it. You know, even in the midst of all this crazy stuff going on, Bitcoin has still remained true to its macro structure, and obviously the all-encompassing macro structure model is the 4-year cycle. Hence, I'll say it once more time before I end the video here in the live stream. The 4-year cycle is stronger than the macro on Bitcoin. That's my personal opinion. That's what I'm going to stick with. Thanks for watching the video, guys. I want to take a brief look into the BitGet Exchange. Now, this is my favorite exchange. I use this exchange for trading personally. I think everyone in Wolves Crypto should do so. Why is that? Well, the reasons are very clear in my opinion. First and foremost, it's 5 times cheaper than Binance, and Binance is known to be the cheapest exchange. It's also non-KYC on your personal end if you don't want it to be, and that obviously stands true to the values of cryptocurrency being decentralized. You can also KYC if you want to make it easier for tax reasons, but if you don't want to, you don't have to. That means that it is available globally, so everyone in the world can access this exchange due to the fact that it's non-KYC, which is great. It also has a protection fund, which is a very important thing, right? Because exchanges get hacked all the time, and people get hacked all the time by people in their personal lives. If you do get hacked and something happens, you can make a claim to that protection fund. They've got over like $200 million in reserve, so that if you make a claim and your claim is accepted, you can get that refunded into your account. That adds extra security to the exchange as well. And then on top of that, it's got a reward center that's available with my referral link, and you can gain access to over 4,000 USD in rewards. And I think just a temporary time frame, there is an extra little bonus thing going on. If you sign up to the exchange, use my referral link, and you do one trade, you'll get $10 deposited into your account, regardless of whether that was a profitable or negative trade. So go ahead and sign up to the BitGet Exchange, use my referral link. It really helps out the channel, and it definitely helps out yourself. This is by no doubt, by no stretch of the imagination, the best exchange I have found in the cryptocurrency market. It's so good that I actually reached out to these guys for a partnership. They didn't reach out to me, so check it out. And then we've also got the Crypto Academy. And if you're interested in becoming a trader, if you're interested to learn how to trade, to learn how to do TA, to learn how to identify market patterns, etc., and navigate an exchange correctly, you can sign up to this course, Become a Trader, a 10-unit course. This course is, of course, developed by myself and Megawell Crypto, who's a fellow analyst in the space that a lot of you already know. We work very closely, and we worked closely using our two separate perspectives on the market to create one very consolidated, very concise course that is no doubt extremely useful for anyone wanting to become a trader or anyone wanting to improve their trading capabilities. We've got 10 units. All of these units have been critically analyzed by ourselves and also people we know in our personal lives, and we found them to be completely coherent and completely effective in teaching people how to trade. We use different learning strategies, for example, visual learning, verbal learning, practical learning. We've incorporated all of that in, and this is by no stretch of the imagination the best course you're going to find on the internet for cryptocurrency education. So go ahead and email us here at Crypto Academy Courses to find out more information. Without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.